This is just basically the custom CCM setting for all of these. I usually leave the channels, so we can see what kind of trend it's in. Since the environment is overall kind of choppy, just recently, I have the 4-hour time frames pulled up, but a lot of times it's good to have perspective for what's going on the 1 day. However, without even having to do anything, you can have a pretty decent understanding of what's going on the 1 day for any of these just by looking at the 1 day column, right? So this lets you know if the volatility cloud is red like this, and it's serving as a resistance, or if it's green like this and it's serving as a support. So the more green, the more chances are you're wanting to be looking for a long. The more red, more chances are, you probably would be looking for a short because there's so many resistances overhead. So that's that. And then the next one, just to make sure we're on the same page, this is breakout bars. So this lets you know, without having to go and look at all the different time frames, this lets you know for each one of these time frames, is the bar orange, which is relatively bullish? Is it yellow, which is not as bullish, but still pretty bullish? Maybe it's about to turn orange, or it's about to weaken into normal. Or it lets you know if the bar is blue or cyan, which I don't see any on here, but if we did, that means that it's pretty bearish. And they show up as red dots, right? If it's blue or cyan, it's kind of just letting you know that the bars are that cyan color, which is like 75% bearish confluence, or it's even more likely to, fall, and it's 85% or more bearish confluence, which would be the deeper blue bars like these, right? So you can kind of see like what they look like when they show up. So when it's empty like this, that just means that there's no overwhelming pressure, which kind of makes it dangerous to do anything. Generally means you're trying to get in ahead of whatever pressure is going to come and take the chance that you'll be right. But I figure you might as well wait for pressure to show up, at least on a few of them, right? Like there's no reason to rush it. Generally, this pressure will show up at least something like that, right? And you can kind of see like what that looks like on Phantom's price action on 4-hour bars. So the 4-hour bars are right here on this chart. Like I'm looking at the 4-hour, but you can see like that's what down pressure looks like in these overall really small time frames, like the 24-minute, 45-minute, 1 hour. So that just gives you a glimpse of like what's the pressure, what's the emotion, what's the really, really short-term price action in danger of doing. So in Phantom's case, it's more likely to go down by quite a bit than up, right? Even just short-term in those time frames. Movement monitor is the line, right? So when it's orange, that's as bullish as it gets. It has to meet quite a few criteria to actually turn orange. Otherwise, it just stays green. So orange is as good as you can get for a long. Again, just relative to these time frames, though. And when it shows up as a big green dot, it means it's orange. When it shows up as a small green dot, it means it's green, like this. But it has not turned orange yet. So it's not as good. It's like just truly could just be volatility, or it still needs some work to do to actually turn orange in that time frame. And then when it's a small red dot in the movement monitor, that means it's red. So kind of like this over here on the top left. And when it turns big red dot in the movement monitor column, that means that line is blue, which, as you can see, is a lot of times what the color that it goes to when there's a larger move, again, relative to the time frame. But that one's the one that's like conditions are looking really good for a short relative to that time frame. And so that's movement monitor. And I guess what I would say is there's about like 8 or 9 different criteria that go into judging what color a bar should be. So it's quite a bit that is being processed to like let us know that it's that color. So that's pretty powerful, especially when it's across a bunch of different time frames, especially the larger time frames. Smaller can kind of like change, with volatility, it can change and be really annoying. But if you have like a ton of, confluence across, like, let's say all of these, all the way into the 1 day, 2 day, and 3 day, usually that's a great environment to go long or to go short if they're all the same color. Like then you just have to find an intelligent entry, but at least you know the direction, right? So if all of those are green, all of these are green, all of the movement monitors are green, especially if it goes down into like these multi-days, you don't have nearly as much red down there. That's a great place to find a nice move. That's movement monitor though. Linear regression is super helpful. It's weird. It's like we'll see things and we won't really acknowledge them. I think humans will not acknowledge the things that we see for what they are. So like we see that there's this huge, probably 400-hour channel. 400 hours, what is that? Just for perspective, 400 divided by 24, that's 16, 17 days of bearish channel. And yet we'll, for whatever reason, we'll think it's a good idea to go for a long right here. Like
Right. Yes.
that's just kind of like, we're like, oh, look, these two columns, these two rows or these three rows are bullish, so I should go for a long. And that's kind of why I think the don't do dumb things list is relevant. If we pull up the flex charts, usually we'll find a number of these ribbons that are right above us. We'll find, potentially some volatility clouds that are right there. We'll be looking at all of these channels at the same time. Like if I pull up VET, we'll be looking at all these channels at the same time, and we'll notice, just like it shows here, that the 600-hour channel, the 1200-hour channel, the 100-day channel, the 200-day channel, and the 300-day channel are all bearish. And so it's just kind of like a nice warning to say, like, that's what you should realize before looking for a long, based on tiny time frames, relatively speaking, like based on up to the 2 hour being bullish. That does not mean we're in obviously like a bull market, right? But when Bitcoin was super bullish and we were blowing through 40,000 for the first time in a really long time, whenever that was, back in like January or something, this whole chart all the way to the 1 week was green. It was really crazy. And so that's, I think it's important to note that like charts do have that kind of configuration. And when it's not like that, we should believe them. And when it is like that, we should also believe them and consider, a long position. But that's, the linear regression side of things. These little columns, so linear regression, you'll note, kind of covers two, right? It covers two columns. It's right in the middle of them. And that is because one of them is the past 100 bars on the channel. And the other one is actually letting you know if it's breaking, right? Like if it's potentially shifting direction. And it's a little hard maybe to wrap your head around a little bit, but this, for instance, means the 24-minute is bearish in slope. So it's just like this one here, give or take, right? It's declining, it's sloping downward. And this little green dot next to it just lets you know that it's weakening. So it's just like this Cardano chart. You can see these little blue dotted lines that kind of signify that it's breaking, right? It used to be this bearish in slope, and now it's less bearish, but it's still bearish. So we don't want to confuse that with bullish. So it could be, early signs of a reversal, but for now, it is still technically a bearish slope. But when we say it's breaking, it just means, let's see if I can draw one. Bearish is like this, and then breaking or weakening, like what we see here on these two little columns, saying that it's kind of like got some bullish breaks. That means that maybe it's still bearish, but it's like a little less bearish, right? It's
Right.
changing somehow to be less bearish, but it's still bearish. So it's, again, never confuse that with being bullish. It has the potential to turn bullish, but is not yet bullish. And when it is bullish, both of those little circles will be green. Let's see if we have one like that. No. Oh, here we go. Like this, over here on Phantom. The past 200 hours for Phantom have been a bearish, a bullish slope and intensifying. And so that's kind of interesting, that that data lets us know if it's intensifying. And so what's really cool is when you have a bunch of bullish slopes and all of them are intensifying. And I'll show you what that looks like. Because again, when you haven't seen it in a while, it makes you feel like maybe it doesn't exist. And so you tend to look to make something happen when something is not really there. And so I'm going to show you my stocks chart, because stocks are doing different things right now. And so they let me show you, some things differently. But like, for instance, here is PayPal, and PayPal is kind of like seeing some bearish volatility, bearish channels, bearish breaks over the past, up to about 100 hours. But all in all, aside from that, it's had a really, really steady run of being bullish and breaking bullish. And so when you kind of like put that in perspective, it gives you a little bit of like, a little bit of clarity on what's really happening and what's not happening. So, and as you can see, this is the 4, right? This is the 4 hour this happens to be PayPal. But I'm sure the 6 hour looks very similar. And the 2 hour is also bullish. So let me see if I can pull up if you want to look at the 4 hour, the cool thing about this chart or this monitor is you can double click it. Takes a second, I guess. There it is. So you can double click it, and then you can just change that one row. It said 6 hour. I happen to want to see the 4 hour because I'm looking at the 4 hour chart. And so now it's processing, and it's about to change this little 6 to a 4. So I can be looking at what it looks like on the monitor there, that little square. And then I can also look at what it looks like on my chart here. So you can see that the 4 hour is bullish, just like this slope, says it is. But this little blue line here, this little channel break, says that it has kind of like in this past day or so, it has kind of like broken a little bit. So the slope was slightly more intense. So if I zoom in a little bit, you can see that blue dotted line. Let's see where the annotate is. Yeah. So like this is what those channel breaks look like. These blue dotted lines, right? This was one that was bearish for quite a while, and then there was a point in time where this price action broke that, and then it started going up. So that was a bearish channel that broke bullish and then turned into an all-out uptrend. So that's there. And then this one is showing you that we are currently in a 400-hour uptrend, right? So this is basically 17 days of bullish pressure, and it's saying that we should be cautious because this is weakening, and that's the slope that it was. That was the bottom. That was the bottom part of the channel, essentially, of where the slope was. And now, as you can see, the bottom part of the channel is just a little bit lower. So it's not an extreme break, and it could easily just keep going and stay bullish. But like, we should know that that's breaking a little bit. And so that's what this little side circle is. It's saying we're still bullish, but caution, that trend could be weakening. There has been at least one break. So that's that. And let's see. These two are two of my favorites. These are like probably I'm sure in DIIO 24 when Joel does it, and just in general, we're gonna make a bigger deal out of those two. Trend Scanner is the one that's responsible for making these boxes. I tend to not look for trades on anything that doesn't have Trend Scanner confluence, right? So like I'm in a Exxon Mobil trade. I don't know if I should be, but it's a 23-day trade. And I'm in it partly because I like the fact that it has pretty clean trends for bearishness in the 1 hour, 2 hour, 4 hour, 12 hour, 1 day. So I figure, man, somewhere over the next 23 days, I should be able to cash out and have, a nice little ROI. And then, the companion, I guess you could say to that, that you also want to have, because one without the other is not as powerful, is this little set of dots across as many time frames as you can get. In this case, I'm in the short, but that is for the expansion monitor. And the expansion monitor is what's responsible for these dots showing up right here, right? Like these dots. I think those are the main ones I see. But as you can see, like this is where the expansion monitor started, and it works pretty well. And then this is roughly where it started on this random real estate stock, and then it worked pretty well. At least good enough to get you into a position and protect your, profit with a stop loss. And then if you have a situation where it goes against you, you can at least bail out of the stock. And so that's in my opinion why those two are really nice. So if I get, out of here and I zoom out for Exxon, for instance, which crypto is exactly the same way. I can look at a few things. I can see that the 4 hour has expansion dots. I can see, and if I pull up the 1 day chart, the 1 day for the first time just today closed with an expansion dot. The 1 day, is pretty bearish. So it could, bounce, I guess you could say. There's some pretty heavy supports not too far away, but there's definitely a lot of room for expansion. And overall, the trend scanner does what it does to kind of like show you places where any given asset has as little opposing volatility as possible. So the only reason it shows up here is because this movement monitor is blue the whole time. That's one of the conditions. It will not show up if the movement monitor is not blue or orange. So in the case of a red box, it only shows up when the movement monitor is blue. And it will also measure, you can set it however you like, but the default is 5 candles. So for any given chart you're looking at, it's going to look at the past 5 candles. And its job is basically just to look for anything where the movement monitor stopped being blue, in this case, and also if any of these candles were yellow or orange, indicating that was a candle that closed with a lot of bullish volatility. And we don't want that if we're thinking about entering a short. Like we don't want to have to watch our position go upside down and things like that. So it's not foolproof because it's just statistics, but at the same time, it at least identifies the best opportunities that have historically, across all these different time frames right here, had very, very little opposing volatility, or at least not enough to even have an orange bar, right? So if I pulled up the 1 hour chart and I looked at the past 5 hours, there wouldn't be any yellow or orange, and it was blue movement monitor the whole time. And then the same thing for the 2 hour, the 4 hour, the 12 hour, and the 1 day. And so that for me, in the scope of my 23-day put option trade, which is essentially me shorting Exxon for a bit, creates the best environment for minimal volatility. Because even in the option space, if I short it here and I put whatever I put into it and it goes against me for a little while, you kind of have to ask yourself how sure you are that within 23 days it's going to be where you want it to be. Because while it's going against you, just like crypto futures, your position is upside down and you can't get out of it without losing money. Now, the bright side is I would have, a good 10 or 15 days probably to get out with profit. So it may just be my psychology that I have to mess with. And, a few days from now, it could be exactly where I want it, way down here. But that's what I'm trying to avoid. And that's where Trend Scanner helps. Without Trend Scanner, we have to assume that there's a good chance that there's been, opposing volatility. So here it's been bearish and there's been no significant bullish volatility. And so that's why in this case, Exxon is great for potential for a short. It also has nice bearish pressure in the multi-day, right? For somebody going into a 20, 23-day trade, it has a lot of, potential to drop. And then I'm kind of looking at movement monitors here too. I like that on the custom, all of these are either red or blue. Maybe not the 1 week, but I have a
Yeah.
lot of room for this to potentially drop. And then in the most recent linear regression, we can look and we can see that everything all the way into the 4 hour is kind of like breaking bearish. And so I'm using all of those things to just kind of like decide, the chance I want to take. And then even then, if I want to, just like crypto, I can decide, hey man, if this thing goes against me and I lose 15% or 10%, or even if it's just 5%, I can bail out. Or I can just say, you know what, I'm gonna put X dollars into it and I'm gonna risk it all. And I either, win or I lose, but I'm just gonna check back in 10 days. And I think statistically I should win. So you can play it a number of different ways. In crypto, it's you have to if you're using higher leverage, you just have to worry about liquidation. Options, you have to worry about running out of time. Crypto, you have to worry about if you're using high leverage, that you could get liquidated and it takes all your money. If you only have
Right.
like 1x leverage or 2x leverage, then you can let it ride and you can probably have looser stop losses and all kinds of things. Um, but I just wanted to kind of like do a refresher, I guess you could say, on
Yeah.
what all those mean. Because now I can take you through some live charts and maybe we can find a trade and I'll just kind of give you like my rundown on how to do it.